Welcome everybody to Successful Options Trader of the Month for, I guess this would be for June technically, 2016. We have Seth Freudberg here who we've chosen as Successful Trader of the Month. Before we get going, let's just quickly go over our disclaimers here and let you know this presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk of loss in trading options is substantial, and make sure you're aware of all your risks prior to placing any trades. We may do some trade demonstrations during the webinar. If we do, assume they are hypothetical computer-simulated trades unless otherwise noted, and hypothetical trades are believed to be as accurately represented as possible. However, live results may vary. All right, well, again, good afternoon, everybody, and welcome to our Successful Trader of the Month interview. Successful Trader of the Month is a program that Sherry and I have come up with to reward and honor those traders who have put forth the work and as a result are doing awesome with their trading or some other parts of their life. And they receive a prestigious Lock in Your Success Successful Options Trader hat and a place forever on our wall of fame. Successful Trader of the Month is also for you, the aspiring trader, because by having those successful traders share their experiences with you, you can gain useful insight and become inspired by knowing that it can be done. And there are many, many different paths in order to do so. A trader can qualify for Successful Trader of the Month in several ways. First would be to provide a trading plan in a recent trade that we can evaluate. Second would be to stand out by helping out in our community. This might be through sharing useful information or providing guidance or providing encouragement. Third might be if we notice someone who has a significant breakthrough or breaks through a barrier in their life and overcomes a challenge. And fourth would be for creativeness. In other words, someone who successfully adapted their trading to their unique personality, whether it be through one of my styles, someone else's, or even better, something they maybe came up on their own. So today we're speaking with Seth Freudberg, and Seth was chosen because of the significant breakthroughs and remarkable progress he's made in his life and in his trading. He's transformed his trading and his career and propelled himself forward to become Director of Options Trading for a company called SMB University, or SMB Training, in Manhattan, and he's also a head trader and manager of their prop trading desk and deals with millions of dollars in the option strategies. It's a fantastic and inspirational story. So let's get to it. And good afternoon, Seth.
Hey, thank you, John. Appreciate it very, very much. The tables are turned. I'm being interviewed by you.
Yeah, usually Seth is the head guy when and he talks to me. So we're leading Seth on today. But,
not the head guy, just the host. Yeah.
He's usually Seth is the host. We'll put it that way. So, why don't you tell us about yourself, how you went from someone who didn't really know a whole lot about options at one point to managing a multi-million-dollar options prop desk and being the director of options trading and training at SMB University.
Well, thank you, John, and hi, everybody. There's I have to look at the attendee list, but I'm confident that a bunch of us know each other, and I see Sherry on, so I know her, and I guess I'll have to look at the rest of the attendees, but I'm quite confident that many of us know each other, so welcome, everyone, all my good friends. And anyone who was out in Hawaii at the Trader Triangle event, might have heard some of this, but, maybe give you a little bit more background and flavor and so forth. So, John, I don't know how far back in time you want me to go. My first memory as a human being. Or
well, when you were born, no,
yeah.
I don't know. It's just you were. I know you were a mentor at Sheridan Mentoring for a while. Before
Yes.
that, you were doing some insurance company stuff, right? So.
Yeah. Well, I think it's interesting to just say I was 27 I'm 57 now, and my dad started this insurance company in 1960, and he had actually been running insurance companies for 10 years before that. And he brought me into the company right after I got out of college in 1983. And I then, I guess I was, 24. At 27, my dad wanted to retire, and the board of directors needed to find a replacement. So they decided to give me a shot under the theory that if I didn't work out, they just accept my father's retirement fire me and, find somebody else. And what happened was it worked out, well, and my dad, did a good job of training me. And so the company, we were, very successful, really grew the company. And then in 2006, I decided the insurance industry had enough of me, and I had enough of the insurance industry. So I'd been involved in 22 years, and I really wanted to move on. So I negotiated a retirement agreement with my company, and at that point I was 47. So I basically halfway through what would be most people's careers, I retired from one business. Well, I'm not the kind of person that likes to sit around, and so goof off. I feel very bad and unproductive when I'm doing that. So I like to be productive and off, and give back to society and contribute in some way. So that year, I had a very, very dear friend, Tony Benincasa, who's still my very dear friend. In fact, I'm sitting in his office right now because I work out of the offices that he and his brother own. I rent some space from them. And he was involved. He was into options trading. He had been involved actually at that point for over 20. He was one of the really early retail options traders. He was trading options retail in the early 80s, believe it or not. So, when the SIBO was really just kind of, I guess, getting geared up in the 70s and early 80s. And he was, I said, I've always loved investing. I've always loved trading. What is it exactly, you do? How do you trade? And so he came over one day. He showed me, all these graphs and iron condor looking things and butterfly looking things. I had no idea, what this was really all about. I knew what a call option was. I knew what a put option was. I had no idea why they made these funny shapes and rhinos and, whatever. So I couldn't understand that. Then I got on to Sheridan. At that time, Tony was actually mentoring personally with Dan Sheridan. I don't know if you remember, John, but Dan actually was the original only mentor when he was with Option.
I think when I started, I think he was the only mentor as well.
He was the only mentor, and he was actually had this joint venture or whatever it was with going on with Option View. So right. Dan, I remember after that, this is how little I knew about options. This was, I guess, April 2006. And I went over to Tony's house. He put it on the speaker. He had his session with Dan. And at the end of the session, I just laughed. And Tony said, "What's so funny?" And I said, I feel like I'm an experienced guy. I've been an executive. I've been a CEO of a publicly traded company, for a number of years. I think I'm fairly sophisticated in financial matters. You guys just talked for 1 hour, and I could not understand one word you were saying. And that was, I really didn't understand what the heck they were talking about. And so, the Greeks and Delta and Vega, if you heard these words for the first time, you really have no idea what they're talking about. And so I said, it sounds like a lot of fun. It sounds like it's going to be a challenge. I have no idea what you're talking about, but let's give it a shot. And so I took the course, and I remember I was, and it's funny, actually, John. I mean, I don't know how far afield you want to go here today, but I think it's just so many things I learned in that process. I mentored. I'll fast forward to that in a minute. But I mentored, and I have noticed there are like 3 or 4 categories of mentees that you can work with. I always thought everybody was like me. And then when I started mentoring, I realized that everybody was not like me. And, maybe this is a clue for people as far as, how to make progress in things, because I was so avid. I was so into it. I loved it, first of all, right away. I think that's a key thing. I loved options trading. I still do. The second thing was I was so eager to learn. It was, because basically I was creating a new career for myself. So I had, in a sense, I had to make this work, right? So, that really wasn't so much what was driving me as just the absolute fascination that I had with it. And so I would have my sessions with Dan, And the night before, I'd sit down and I'd write up every question I came up with from the previous week, from trading, from back testing, from watching paper traders or whatever. And I had this mammoth list, and it kept getting bigger and bigger. And you know, Dan can't stop talking. I love the guy, love him, but you know he can't stop talking. So you get on, you start asking questions, then he starts talking about whatever he wants to talk about. You can never get your questions in. So the list just started getting longer and longer. And you know, at the end of the process, I was frustrated because at the end of the last session, I had the most questions I ever had. I ran out of sessions. So, but Dan was very generous, so he kept having sessions with me anyway. So I then from there started to feel like, so my point was, of the other kind of mentees that there are, one of the amazing things was about half of all people who signed up for Sheridan Mentoring never actually went through with the mentoring. I know that's unbelievable to say because they spend a lot of money, but when I would approach them to, once I became a mentor, when I would approach them to give me some dates that would work for them for our first meeting, 50% of the people would never respond. Wow. It was unbelievable. So if you want to talk about trading success, a good portion of it is simply being interested and having a feeling you like you love it, and a feeling that it's something you really enjoy, and you have a natural intellectual curiosity about that. That's, I'm telling you, is like half the battle, just that. And so anyway, so back to my process. So I started trading, and I fell in love with the iron condor. I became fascinated. This concept that you could just put this gigantic football field around the market, and then as long as, you know, nobody got a touchdown, you know, and you just as long as the market stayed between the two short strikes, you would win, and there was an 86% chance of that happening. So I thought to myself, all I've got to do is master the iron condor, and it's over. I win, right? And okay. And so it was an absolutely childish, preposterous concept, but I didn't know it at the time. And so finally, it was the Dan's, you know, set me loose to trade on my own, I guess in September 2006. And if you look at a chart of 2006, right through to February, late February 2007, is the perfect chart to trade iron condors. It was a slow up grinding move with reduced volatility, and the market would just chill out enough towards the end that the market would be. So if you look at a chart, it goes right to 2007, and you know, February 2007, and it was the easiest chart in the world to trade iron condors. And of course, I didn't know that. I just knew I kept winning every month. And so I made, and can I please ask everyone to, if you take notes in these sessions, please take this one note. Even if you fall asleep or anything else I'm going to tell you, please take this one note, and that is this. I went from trading, I'm not going to tell you the dollar amounts involved because it's a nightmare, but I went from trading a certain size account up until February, I guess would have been the March 2007 iron condor expiration. I went from one level to, let me do the math on this, 2,000% increase in capital. Okay?
There you go. You had it figured out.
I had it figured out, so I can now, I don't know, you know, he's quintuples 5 times. I don't know what it is for 20 times. Whatever that word would be, I did 20 times. I don't know what the hell I was thinking. I believe it was, okay, now I can start earning a living doing this. So how much capital do I need? Well, did the math. Well, if I had this return these months, then you use this return. You know, at this return, you get this much. So right. At this capital level, you get this much. So as though the options gods were watching me, they were waiting for me to do this. And then if you look at, I think, February 27, 2007, there was this out of nowhere crash. crash-like thing. I don't know what triggered it. I don't remember. I don't think it matters. Something triggered it. There was this crashy kind of thing happened. I think the market was down like Dow was down 500 points at one point, which back in 2007 was a monstrous move, okay? And I didn't know anything about not trading between 9:30 and 10:30. I didn't know nothing. And so I freaked out. My put side was getting hammered beyond belief. I freaked out. I closed the trade. If I hadn't done anything, the market would have recovered. Like 1 hour later, I would have been fine. And so I do not want to tell you the amount of money I lost that day. So, but believe me, you don't want to go through that.
I think you told me it was quite a bit.
Yes, it was quite a bit. And so, you know, I had to turn a large fortune into a small fortune. So, now, you know, it wasn't that bad for me personally, but it was pretty bad. And so that was a wake-up call. Believe me, that was a wake-up. It was like somebody brought a brass band into my room, and that was my alarm. And so I, at that point, realized I did not know what the hell I was doing. That it was unbelievably, preposterously ridiculous that I increased my capital level to that extent. And, you know, I had to find a better way. And so I still, believe it or not, did not lose my fascination with iron condors. I started to develop various and sundry iron condor techniques. And they all work to some extent. The one that we were being taught doesn't really work that well. The ones that I was developing actually were pretty good, but there was a problem with those, which is they didn't really match my risk profile as a trader. I don't know if risk profile is the right word, but my particular approach to risk, it was not meeting that at all. I mean, when you'd back test them, it looked great. Wow, this is cool. Hey, look at all the return I'm getting. But what I wasn't doing during the back test was asking myself the fundamental question, what is the outcome?
Can you actually trade this thing?
Can you actually trade? Exactly. Can I actually trade? That's a great way to put it, John. Can I actually trade this way? And, you know, this is the part that people who just get started have no idea what we're talking about here, but I'm guessing most of the people in this webinar do understand what I mean. There's a difference between a really well-designed strategy that gives you a great return and a strategy that you're going to be willing to trade. There's a guy named Ed Seykota, you know, famous trader, and he said the easiest thing in the world is to develop an option strategy that works, or a trading strategy that works, and the most difficult thing in the world is to follow that strategy. And I always thought that was a really, really great quote. I think it's fantastic. And so I think the solution is, rather than try to make yourself do the hardest thing in the world, which is to trade a strategy with an amount of capital that you're clearly not comfortable with, even though it works out in backtesting, it's better to find a strategy that you can actually trade and a strategy that would work. And so we'll come back to that in this little history. We'll come back to that a little bit later. So, John, you tell me if I'm going on too long or whatever, because I'm just talking.
We can pick it up.
Okay. Does everyone want to speed up a little bit?
Just a little bit. Yeah.
Okay.
That's good. That's good. I think it's very interesting, though. It's very interesting.
Yeah. No. Well, I mean, I'm trying to me, part of this process should be to share. Yeah.
You got some awesome insights there. Awesome insights there. Yeah.
Right. Exactly. Okay. So I then was a mentoring. So let's move on to my being a. What happened was I started to become very active in Sheridan, and I got pretty close with Dan. Tony and I, he came over to Tony's house one day. I was there. We hung out in the morning. Then he did a seminar in Philly that afternoon, and so we were pretty close. And so when it came time, he had an opening for mentors, and I said I'd be willing to be one of your mentors. So we worked out a deal, and I was mentoring 10 students a week. So that was going on for a while, and then I realized that I was bored out of my mind, honestly. I'd been a CEO of a company, so I I wanted to, to do more. I felt like I could contribute more. And so John, at one point during this whole endeavor of mine in my journey, John and I met in one of the trading groups under Sheridan, and we just got friendly.
Trading Group 16.
Trading Group 16, the famous great trading. This is like walking down memory lane. So
That's right.
in Trading Group 16, John was the head of that. Dan assigned me basically to keep an eye on John because he didn't know what he was up to. He wanted one of the mentors to be involved in every trading group. So he made me whatever co-captain. And so John was running the group, and he called me up one day. We just got to know each other. And then we would chat on Skype a lot, as we do to this day. And so John said to me one day, Seth, I really think you might benefit from a life coaching process because you're at a crossroads here. You want to do more, and and so forth. So and he said, I said, let me give it a try. And so we started to go through this formal process, which was really, really great. And I don't know any of you who have not gone through the life coaching part of what John does. I guess most of you or all of you have been involved in the trading coaching aspect in one way or another. But the life coaching process is mind-blowing. And the thing is, it's not that it's so special. If somebody says, what's so special about it? I'm not sure I could answer that question. But I will tell you how I felt, which was, John and I would meet, I forget, it was every Thursday night, something like that. We would get together as part of the process. We would have a call. He'd give me homework from the last assignment. A lot of them were about, envisioning what I wanted in the future. And
lots of crazy stuff, which you probably had no desire to do whatsoever.
No, I did. No, I thought the exercises were interesting. I enjoyed them. And they were work. I had to do some work, but, nothing's good without work. Nothing, and there were lots of exercises. I mean, I get on, one day he showed me a picture of people, I think bouncing a basketball or something, and should I give it away or not, John?
Yeah, you can go ahead, go for it.
And it turns out you're watching people, something to do with the basketball, and then a gorilla walks through, it isn't a real gorilla, it's a guy who dressed up in a gorilla outfit, walks through in the middle of all these people passing basketballs to each other or something, and you're focusing on one thing, and you don't see that a gorilla just walked through. Now, anyone normal watching it would have seen the gorilla, but because you were so focused on them passing the basketball to each other or whatever they were doing, that you actually did not see the gorilla consciously. Subconsciously you did, and you proved that to me somehow, but consciously I did not see. I did because your conscious mind can only focus on one thing at a time. Your subconscious mind's picking up everything. So anyway, he was teaching me about how the mind works, the conscious mind, the subconscious mind, which is very, very important. You don't realize how important it is. He taught me about self-talk, and I had this horrible negative self-talk going on with myself, where every time I would make a trading mistake, I'd start berating myself like, you idiot, what kind of a trader are you? You call yourself a trader. How can you even mentor people? You should just quit and, become a garbage man or something. And I had a terrible self-talk issue, which is horrendous in terms of your ability to trade successfully if you self-talk negatively. And he taught me, an awful lot of things. And I remember I would get off, some days I didn't even want to get on the call. I was so bummed out about my trading or upset about something or other. And I remember telling my wife during that period, I don't know what this guy does, but every single time I get off the phone with him, no matter how bad I feel when I get on, I feel great by the end. And it's nothing magical. It's just what John does is he asks you the right questions, and he forces you to answer them. Not forcing you, but by pushing you to answer those questions, you go through this process of self-discovery. And it's amazing. And the essence of the process is, you got to figure out what you want, be clear about what you want, be clear about what the steps are to get you there, and then be clear about a process to get you there. And I mean, I don't know if that's a really good summary or not, John, but it's what I remember going to. Yeah, and so so at the end, I had to set out a vision for myself. So he said, what would you forget about everything you've done, everything you're doing? What would you like to do? What would be a fun day for you in your career? I said, well, I would like to have a group of traders that I was picturing this being physically in an office somewhere. I didn't picture anything being virtual, but the concept was to be in an office with a bunch of other traders who love trading, and we'd have put together a fund with outside investors and just have a great time trading people's capital, sharing ideas, and so forth. That was my idea. That was a big part of what I envisioned as the career aspect of my life. And then John talked to me about the law of attraction and how by wanting something to happen, it can essentially bring it to you. And one day, I got interested in day trading, and I took this course. It was okay, but I wanted to learn more. And so we found out about Tony, my trading partner here in Philly, said to me, there's places that actually give you capital to trade. I said, I never heard, well, who would give you capital to trade? He said, they're called proprietary trading firms. And one of the famous ones is SMB Capital up in New York. Let's just look them up. And we went on the internet, we looked them up, and we saw Mike Belfiore and Steve Spencer and on there. And so I called up their sales guy, and I said, how can I take your day trading course? It was a 5-week course in their offices in New York. And so in the process of signing up for this course, I told them I was trading options right now. I taught options. And so they started kind of sending me little messages like, hey, when you get up here, let's talk about that because we want to open up an options department. So
part of the thing is, I think, when we were talking back and forth, one of the things as we're searching for what we really want to do in life, sometimes we take little offshoots to see where they go. And one of the things Seth was kind of interested in was day trading. So,
exactly.
And that kind of just sent us off on a path that actually connected back in, right?
Exactly, right. And so I went up there. I actually rented a hotel room for 5 straight weeks. It was grueling because I wanted to get everything out. Whenever I do something, I really, really dig in to try to get something out of it. It's just my nature. And so I was taking notes. And again, it's unbelievable. When you're a certain way, it's hard to understand how people aren't that way. And the other guys in the course, some of them were just like me, and some of those guys are still there today and tremendously successful day traders. And then, yes, there were guys you could see just weren't doing the work, and they were gone, very quickly. And so what happened was I went to, the course, and while I was up there, they said, hey, let's have a meeting, and they said, you're teaching options. We want to trade options. We want to have an options, training business. And I said, well, I think I'm qualified for that. I already do that. But I'm not really interested unless I can open up a trading desk because that's really my dream. And they said, oh, well, that goes hand in hand with education around here. That's what makes us so unique because we not only train people in trading who trade their own capital, but we also give successful traders, capital to trade as well. So I said, well, as long as both can happen, I'm happy. So I went back to my hotel room that night. I called up John and I said, remember that dream we talked about, that vision for me? I think it's happening, and I can't believe it. I can't believe it's actually happening, but I think it's happening. So
you were a little freaked out.
I was a little freaked out. That's a good point because it's like one thing in theory, it's another thing to actually have it start to unfold. And so John was in the background the whole time. I've told SMB this, so it's no surprise to anybody. But John was in the background the whole time, and I was negotiating my deal with SMB to trade options, to be the head trader on their trading desk, as well as to be to run the. Well, all we knew was the options education business at that point. That's all we called it. We didn't really know exactly what form it was going to take other than this foundation program we call Options Foundation. That, I had to do that. So we ended up making it. The program was over. I left there, but we were still negotiating my agreement, and I finally got to do the deal. And we had an agreement that we would start the options education business, and within a year we would start the trading desk as well. So I said, John, I guess mission accomplished, right? Because the exact vision I had, a group of traders. They're not going to be sitting in an office with me, but we're going to be connected via the internet. It's happening. And so John helped me negotiate behind the scenes, by the way, and he's a very good negotiator. So it was very, very helpful to me. And then we got the deal done. So at that point, I said, well, how the heck are we going to market this thing? And so I came up with this idea of the Options Tribe, having had no idea whether this was going to work or not. Literally, it was just this concept. Hey, let's just have a webinar and see what happens. So John was I think you were the very, very first presenter on the Options Tribe back in May. Yeah, you were, John. You were at least with me on that one.
I think I was the first one. I was with you.
Yeah, I think you were the very first presenter. And I remember I've spoken to pretty large crowds and so forth but something about doing a webinar terrified me. And John called me afterwards and he goes, were you nervous? Because I think you were a little surprised. And I said, honestly, I was, because it's one thing to speak in front of a group of people. It's another thing to speak to like 400 people, none of whom you're seeing. It's a little unnerving, at first. So anyway, then I started to put this Options Foundation program together. And John said, so it was just work I did not want to do for some reason. It was something I found tedious initially. I got into it, but I found it tedious. And so I remember these calls with John because I was still having my coaching meetings. And I said, John, I'm procrastinating. I'm doing everything in the day but getting back to writing this curriculum up. So he had to literally give me deadlines in the coaching process. And he said, now, I said, John, how am I going to get this done? I keep procrastinating. He said, here's what you're going to do. You're going to call up SMB and you're going to tell them by March 1st, you have to set a date that you will be up there to start filming the video series of the Options Foundation. I said, what do you mean? I don't know if I'm going to be done by then. He goes, if you don't take that step, you're never going to do this. And so that's the kind of practical advice John gives people. So I said, oh, man, and I literally was nervous dialing the phone. I hung up a couple times. I finally called up and I said, all right, set the cameras up for whatever the date was, March 17th, and I'll be up there to tape it, block out the whole week. I got off the phone and I went, oh, my God, what the hell did I just do? That means, and I only had like 1/4 of the curriculum done at that point. So I'm thinking, what the hell did I just do? And then it was just one of those things. You set a deadline, you got to meet it, right? So I just got it done somehow. And I remember John saying, and during it, it was like, I don't know if I'm going to make it. And he said, Seth, you made a commitment to me and to them. You get it done by March 17th, correct? I said, yes. He goes, well, I expect people to come through on their commitments. I'll never forget that when you said that to me. And, it was like talking to my dad. And so anyway, we got it done. We filmed it, and then we started building the Options Tribe, and we started to do the individual advanced series. And who else but John Locke did the Bearish Butterfly? Then we did the Rock. Then we did Bearish Butterfly, the Rock, the M3, and then ultimately the M21 and Super Simple Spreads. We did a lot of other stuff too. We had the group mentoring and so forth. So John was obviously an integral part. So, I mean, I'm a little bit of an unusual client in that you were very much a part of the business we had developed, which I'm guessing is not true in other cases, but...
It is sometimes. It depends. A lot of people are confidential, so they don't like to talk about that.
Yeah, I see. So anyway, I understand. But it certainly, you were heavily involved in my dream, by actually being a part of it. So, and we started to put the trading desk together. We built the Options Tribe. We got, I don't know how many, a dozen video series now, maybe more. We've got, we've got 10 traders on our trading desk right now. Most of them are trading John strategies, I might add. And it's a really great group of traders. About half of them I trained, but then they went for some advanced trading with John, basically like Andre and Derek and so forth. I trained them originally, but then they wanted to go farther, and they ended up taking John's courses, and that's when they really got good. Oh, yeah, well, I missed probably the most important part of the story, so I will get back to that, which is, and then I guess you want to go to the heart-friendly butterfly. So the most important part of the story was I was not a consistent trader even when I met SMB. That year was not a good year for me, and I had not yet become consistent until John taught me the M3, which he basically, taught me. He hadn't really even developed the series at that point, but he just taught it to me, and we would trade it together and so forth. And I really learned the ins and outs of that strategy. And once I became competent in the M3, I became completely comfortable and confident as a trader, and I am, until this day.
Doesn't that back into all the other strategies as well? I mean.
Oh yes.
Yeah.
Yeah. I mean, the thing is, what the M3 does for me is it's my bread and butter trade. It's my key trade. I trade it actually in different ways. I have multiple ones going on at the same time, actually, and one of them I traded the SPX with a reasonable size. And so, and I'm actually going to be talking about that on Wednesday in a special webinar, the M21 Challenge webinar. So, but the reason I'm mentioning that is I believe if you don't, for me, it's the M3. For other people, it's whatever. For some people, it's the bearish butterfly. That's their core. Well, Ryan, for instance, Ryan Moffat, his only or core strategy is the bearish butterfly. Now, to me, the bearish butterfly I love, but I'm not willing to trade it on a lot of capital because it's too risky of a strategy for me with a lot of capital. So my way of handling that is I trade it on a small amount of capital. But the M3, I haven't found a size level yet that bothers me, and that's pretty unusual. So that's my bread and butter trade. Every time I put on an M3, I am confident I'm going to win that trade. Do I win them all? Of course not. Do I feel going in that this is absolutely a trade I'm going to win? Every single time. And once you start feeling that way about trading, in my opinion, you will succeed as a trader. It's my opinion.
Yeah. Well, you have to have faith that your system works. So
it's not the only component to successful trading.
Right.
But if you don't have that faith, by definition, you can't trade well, in my opinion, because you will constantly be doing things to deal with the parts of the trade you aren't comfortable with, and everything you're going to do is going to be wrong.
Yeah.
Agreed?
Yeah, I agree. Yep.
Yeah. So anyway, I guess that this is an unusual meeting and that I went on for 45 minutes and haven't pulled up option view yet. And I assume you want me to do that now, or did you have any other questions?
Sure. No, just some more comments, and just so you know, Seth trades other trades as well, and he's developed this heart-friendly butterfly, and he's got some successful condor strategies as well. So it's just, I think a lot of the stuff from the way the M3 was designed, it's kind of designed to help you learn how to trade, and then you can back that into whatever strategy you happen to be doing. So
right.
Just want to make sure that's clear, that you've got a lot of stuff going on over there. So
I do, and so. Let me just tell you quickly about the heart-friendly butterfly.
Do you want me to make you a presenter, Seth?
Yeah, sure.
Okay.
Let me just get back. Yeah, go ahead, John.
Okay. You are a presenter as of right now. You should get something
on my screen.
Yeah.
I used to use GoToMeeting, so I have enough knowledge to be dangerous. Okay. Let me know when my screen is being shared now. I can see that.
Yes.
Okay, great. So let me, full disclosure, every month I basically trade the bearish butterfly, 2 different M3s started at different times, and an SPX M3. So the other 2 are rut M3s. The heart-friendly butterfly, which I developed, I have not been trading lately. Basically because I am really enjoying the different versions of the M3 that I've developed, and I just, haven't really gotten back into the heart-friendly butterfly. However, so, I just want to provide that disclosure to everyone. Having said that, what happened was, just for the heck of it, I forgot what got it motivated, but I went back to look at the heart-friendly butterfly to see how would it have performed in the first 6 months of this year, which were very difficult months for lots of other strategies. And so I figured, just out of curiosity, how would it work? And I went back and I back tested the first 6 months of this year, and it was pretty good. It outperformed almost everything else that was going on. And then I went back to June of last year, and it did very well last year. Of course, last year was a pretty good year for all of our strategies. So so I got a little bit more intrigued, and what's going on right now is that Andrew Fowley and I and a guy named David Wilt from IOTA is some kind of a name of their company. What they do is they have backtesting software, and basically they developed the software so you can backtest, any complex strategy, and once they program it in, it takes 15 seconds to backtest 10 years. It's unbelievable. And I know that there's some other software that do kinds of similar things, but this is very impressive as to options. So we're going through a process now of trying to identify the weaknesses in the strategy, and they found some really interesting ones, which I'm not going to talk about because we're in the middle of it. But we're going to re-release the heart-friendly butterfly shortly with an addendum for slight change. The base strategy works fine, but it's slight changes to the strategy that really improve it. And so we're in the middle of kind of nailing those down. It'll probably be 4 or 5 changes, and we'll do a special video for that. So what we're going to do is anybody who buys it between now and when we do the re-release with the supplemental material and the optimizing, strategy tweaks to it, we're just going to give them the optimization for free, so that that way, it motivates people to learn the base strategy, so then you'll be ready for the the optimized stuff. You follow what I'm saying, John?
Yeah, I follow what you're saying, and it's almost kind of like a rock trader in a way.
Yes, it's very, to me, it's the closest analogy in your strategies is the rock to what this is.
Right. So
except
for this year, I mean, the rock hasn't done that well this year, but except for this year, that strategy is over 100% almost every year. So.
Yeah, it's a tremendous strategy, so it shouldn't be too big of a surprise that it's been doing well. This has been doing well as also,
right.
And it's different. It's different, but it's got some similarities. So
right.
I prepared an example. I looked at a month that was the worst month on our trading desk. Okay, so I figured that would be a good one to compare with the the heart-friendly butterfly would have done, and that's actually the April 2016 heart-friendly butterfly. So let me go to that, and I set it up so that if we didn't have much time, like we don't, we can go through it pretty efficiently. So let me now. I guess I've got to find it, and I'm going to move this thing out of the way. This control panel or whatever it is. And we're going to go over here. Okay, great. So we're going to start the trade. This trade starts at 10:30 because my trading mentor, John Locke, says don't trade before 10:30, although initiating a trade is probably less troublesome. But anyway, so, but I always do what my mentor says. Now,
all right.
Okay, so anyway, here is the beginning of the heart-friendly butterfly, and it's not going to be possible today to go through all the ins and outs of it, but I will say, just the general, here's the theme of the trade. The theme of the trade is, one of the strategies I've always liked is turning a single butterfly into a double butterfly. And if you do that by stepping on the initial strikes, would be in an iron butterfly, then it actually becomes a condor. Just as a result of the way options work. It becomes a condor. And so the typical double butterfly strategy works that if you get to either expiration day break even in the classic double butterfly strategy, then you buy this kind of overlapping butterfly that where the new shorts are where the old longs were. You eliminate the original strike on the side that's being violated or being, what's the word for it, attacked, and then you have a new long strike further up from the money. You'll see what I mean in a minute. But the point is you condorize the butterfly, which is a concept very similar to many of John's strategies. This condorization goes on. And so to make it easy, I designed the strategy to be an iron butterfly that then turns into an iron condor, because people are kind of familiar with iron condors. So I thought it would be easier to explain it, although you obviously can do this on all call side or all put side, because a put condor, a call condor, or an iron condor are all the same trade. Now, so what we then, so we start at the money, nothing fancy, and instead of waiting until you get to the expiration day break even, which, as you could see, you could be really in some big trouble on this trade if you waited until then, we phase into the butterfly as the market rallies. Therefore, if the market were a rally, you phase into it. If the market sells off, well, that's different. We're not phasing into it on the downside, but on the upside, we're phasing into it. And what it means is the butterfly, you're getting a head start on the price of the butterfly. Now, the cost of that is if the market whipsaws, you've now bought a butterfly you never had to buy. So that's the, with every strategy, there is something you're giving up. And in this case, you're giving up never having had to buy that butterfly in the first place. And as you know, typically speaking, when you adjust the strategy, it's better off not to adjust pretty much any strategy. But when you have to adjust it, it's more or less a negative in the trade. It's something you're going to have to make up for later in the trade. So in this case, if you've adjusted upwards to some extent and then the market whipsaws, then that becomes a weakness, not a weakness in this trade, but it becomes something unnecessary that happened if you look back at in retrospect. Now, it's not unnecessary in terms of risk management. It's quite necessary in terms of risk management, but ultimately you wish you hadn't done that adjustment. Let's put it that way. So you start more or less at the money. There's rules around how close you have to be in the money and all that. And then let's move to, and this is actually a pretty simple example, it turned out. What had happened was we had the sell-off as a result of the Chinese stock market falling apart and the price of oil falling apart early in the year. So that caused this business. And then what happened was basically the market decided none of that was actually a problem. And so it decided to get happy again. And we had this tremendous rally, which started, I guess, in mid-February and just kept going and going and going. And it was a very, very powerful rally that occurred. And so this trade starts about 36 days out. The reason it does is that it's an at-the-money theta trade, and the rate of decay of at-the-money options is much faster in the last 4 or 5 weeks than it is before that. And so, any at-the-money strategies, it's not a bad idea to start them, closer in time. And so what we now do, we're just going to move to March 16th at 3:30. So let's move up there. March 16th at 3:30. And as you can see, the market had rallied because we got in this thing at 2,000. We were up to 2028. So according to the rules, there's certain rules about when you start to phase into this butterfly. We then added the butterfly. Now, I want to show you so you don't get mixed up about what happened there. It can be a little confusing. If you go like this, what we're doing is we're adding a half-lot butterfly, the exact same wing width as the previous one, but we're intentionally stepping on the short strike, the long strike, and the short strike. And by doing that, this half butterfly, remember this is a 10-lot iron butterfly, by doing this half lot, we're actually completely eliminating this strike. So it looks like this strike isn't there. It really is there, because what you're doing is you're buying this butterfly. So this really is there, but because you are, but because temporarily you're closing this strike, it looks like there's nothing there at all, and there technically isn't anything there, but it's part of the upside build of the butterfly. Okay, so that is what we're about to do, and then at 4 o'clock we actually do it. And so you can see that middle strike disappeared. With this is half the number it was before, and this is now we're starting to build a new strike up here at 2150. So you get this kind of funny looking structure, and it reminds me of the rock, really, right? The rock in a sense starts this way, right? You know, with the rock you kind of phase in that first butterfly as you start the trade. So wouldn't you say that'd be a fair way of putting it, John?
Yeah, well, sometimes it starts as an M3 type of trade or a straight butterfly, but yeah, it starts.
But when you
same type of configuration here, yes.
Yeah, when you start it as in other words, a partial lot upper butterfly with a kind of full lot bottom butterfly. That's what I think is the similarity to the rock. Okay.
So then, one half size like this is, so it would be technically it's exactly the same except you're a little wider.
Yeah, a little wider, different index, and I don't know where is, you know, there's not necessarily a Greeks-based, there's actually no Greeks elements in this trade at all.
Which is a good thing if you're going to be using something other than option view, because you can really manage it with anything, right?
Yes, that's right, but that's a good point. Yes, this is, there's no, I'm trying to think. There is absolutely no reference to the Greeks in this whole course. This is am I right about that?
I believe you are.
What's that?
I don't recall anything in the Greeks in the class, and I like it because it's a price point system, and I'm thinking of coming out with a price point system myself. So
it's purely price point based, so you know what it does is it takes all the subject. There's literally no subjectivity in the strategy at all, and it's based upon the pure theory of options income trading. You know, that if you give enough time, if the market will tend to stay within a certain range, and given enough time, the time decay is going to evaporate, and you're going to make money on strategies many months. And so this is essentially purely based on that theory. And so now we're going to move to March 18th. So we went to March 17th. We didn't do anything there. And March 18th, I meant to surprise you. So at 3:30, we were still in this structure, and then the market hit our second adjustment point. And so there's, you know, in the course there's a definition of when you've hit the second adjustment point. So we're going to go in and we're going to buy, and now you'll see that second strike does exist. It's just that it had kind of gone into hiding for a little bit. So now we're going to do this. We're going to just do the second half of the butterfly, and when we do that, we actually did it in this case closer to 4 that day, we now went into, you know, full condor structure. So the market's rallying. And it's a little hairy situation because the market's rallying like crazy. But on the other hand, when you do this adjustment, a lot of times you end up actually even more negative deltas than you were before. But that usually happens when the market's, you know, been on a real run. And then when it's on that real run, deltas are getting more and more negative, as you know, John. And so volatility is coming out, deltas are getting more negative, but you also may be reaching the end of the run. This has been a pretty long run here. The SPX was down at 1812 or something, and now it's up at 2050, and it's done it in like a month. That's a pretty nice run. And so one of the other theories of the strategy is, you know, as Dan Sheridan used to say, the elephant eventually gets tired. And so, you know, yeah, that's true. We're still waiting for this elephant to get tired. And so, so then from here, and this is I'm just giving everybody basically a very simple example today. I know we're pretty much out of time here, so I'm happy I did prepare a simple example. But So now all we're doing is really, now we have, we're just waiting for the market to either get to the short strike of this side or this side. So it's very simple. And we're just not going to do anything. We're going to rely on the market's tendency to revert to the mean. Sometimes it does, sometimes it doesn't. And time passing. Time always passes. And so, that's always going to be working for us. And here we got a sell-off. And, we're right pretty much in the sweet spot of the trade. And so what we've done by doing this is we've widened the trade out. We've gotten now, much more width than we had initially in the trade in its condorized position. And then, we have some rules around exit. And basically, the principle in this trade is you're never going to trade there. Very few people are going to trade then. Gamma gets very, very high in expiration week. So what we do is we pick a week before expiration. We measure what the peak profitability would be a week before expiration, and then our profit target is a floating profit target in strategy, and it's basically half of the profit 7 days at the best it could be 7 days before expiration. So in this case, go to option view here, and you go to T plus 15, I think. T plus 15 would get you to April 8th, and that is this date, the blue, the light blue, or the the light blue. And I'd look here and I'd say, all right, P&L on that day is 16,000. So my target profit at this point in the trade, the best it could be 7 days before expiration is 16,000. So my target profit is 8,000 for this trade. Now that can change if the structure changes. But one of the concepts behind this trade is you do not have a fixed target profit. You have a target profit based upon the structure you're in. Because a lot of people get into a strategy where, I have to expire this trade to hit my target profit because they've adjusted it so much there's not that much left in the trade. Well, that's, you start thinking that way and you're going to get yourself into a lot of trouble because you're going to be into such a high gamma period that, you're almost just gambling at that point. So
right.
I don't like
other exit criteria for sure.
You should have other exit criteria. If you've adjusted the strategy enough, it's just unrealistic to get X, and so you have to lower your sights for the purposes of risk management, so you can get in and out of the trade and still make some money. So what we do here, so in this particular case, the elephant actually began to get a bit tired, and that's really, really good for this trade because you're in a condor, and as you said on your session this morning, John, it's a good market for being in a condor. It's not such a good market for being in some other things. Well, when the market kind of does this and it starts to, see it's starting to slow down here, it's really good if you're right in the middle of your tent because you're in maximum theta land at just the right time. And so this was March 28th, and so I guess we'll skip ahead a couple days because we're now over your deadline here. And so we get to here, and you can see the market started rallying again. So now I would remeasure 7 days before expiration, which is roughly this line. It's actually a day after that. But if I look at this line, now my target profit is still 8. But if we don't start making some progress, that's going to end up getting lowered because the more you get close to expiration, you're not at your target, the more you're going to have to kind of lower your sights a little bit. So here we are, March 31st, and we're starting to make some progress on the trade. And let's go, okay, it's actually over at this point. So basically what happened was on Friday, April 1st, when we are, 14 days out from expiration, we've got $3,400. But now, 1 week later, which is 7 days to expiration, now the best you can do on that date is $8,100. So that has changed. And as a result, our target is going to be about $4,000 on this trade. And so we get into Monday morning, and all you need in this kind of thing is a weekend, little bit of no movement over the weekend, very mild open here on that day. And so I think by the end of that day, we were able to expire the trade at our target profit. So all we did, now imagine if you ended up buying that butterfly as the market had rallied and you waited, then you would have paid a lot more for that butterfly that we used to adjust this into an iron condor. And so this was an example of where the market behaved and was very consistent with the way this strategy works, because we ended up rallying and kind of staying up. You can see the market, never really came back down much. It stayed up, and we got ourselves into the, iron condor, in a position where we were far enough away from the money that we, we're going to do fine. So at this day, we actually closed the trade for a gain of $4,700. And in this structure, the, let me see, it was 75 points wide initially. So in this structure, the planned capital is 112,000. And so this would have been what, like a 3% gain, something like that for this particular.
Right. What's your maximum loss on this stuff?
10% of the planned capital, and the planned capital differs depending on
what the price is.
Volatility. There's a couple of things that affect planned capital, and so it's a 10% target, 10% max loss. You don't really hit either all that often. You don't hit target profit or max loss all that often, but the worst you can get is 10%. Sometimes you'll hit target profit. Sometimes you actually get. Sometimes I take that back. There's a moving target profit, so there's no number. So sometimes you can get past 10%. It doesn't happen that often, but it'll happen maybe once a year, kind of a thing. That you'll get, and then you can have like a 14 or 15% month. But a lot of times you'll have a 3 or 4 or 5, something like that, as a win.
Right.
So yeah, and so just a little slight bit of advertising. This is the heart-friendly butterfly. I think you can get there by going to, I should know this, I should be shot because I do not know this, heartfriendlybutterfly.com, yeah, brings you right here, yes. So you can go to, except for some reason Google Chrome's not working too well, but believe me, it gets you there. heartfriendlybutterfly.com is where you can buy it. It's only $5.95 right now, so it's reasonably inexpensive, and as I said, we're going to give folks who own the program, we're going to give you this supplemental information that we're developing for free. Okay, this is awful because it's just not coming up. So let's do it in by going to optionstribe.com, and then we'll go down. This is another way to get there. You go to Heart Friendly Butterfly, and there you go. And then it's only $5.95, so pretty inexpensive, and it's very, very, very systematic. You literally know exactly what you have to do at every single point. I designed it intentionally that way to be, a strategy that is purely based on this notion of we're going to allow the time decay of short options to do their thing, and in most months it's going to be fine. Some months it won't be, but we're leaving our fate up to the not the Greeks, but the nature of short options. Probably the best way to put it.
Yeah, no, that's fantastic, and like I said, I liked that trade when you came out with it. It needed a few tweaks back then, but you took care of it, so that's awesome.
Yeah, exactly. We tweaked it, and we're about to tweak it a little bit more. And it certainly has some similarities to the rock. I think that's the best analogy to your stuff that the Heart Friendly Butterfly is. Yeah.
So that sounds good. Well, I guess we're out of time, Seth, and we have a couple of questions, but we have to move on here. So I'd like to thank you for coming on, sharing your story, and hopefully it's an inspiration to everybody, and sharing the trade, the Heart Friendly Butterfly.
Thank you, John. I appreciate it. Anybody who has any questions, you can go ahead and email them to me. I think you probably know my email is sfreudberg@smbcap.com, and you can go ahead and shoot those questions to me. I'll happy to answer.
Sure, and if you'd like to, if you can't find his email, just let us know and I can find it for you. So thanks for joining us, everybody. Thank you, Seth, for coming on.
One more thing. Hi, Seth.
Oh, hey, Sherry, how you doing?
Good. What I can do is I can capture these questions too, if you want, and then we can answer them. So why don't I do that?
GoToMeeting has some kind of feature where you can pick up what's going on in the chat, right?
Yeah, and then what we'll do is I will post them into in our community under your session. So how's that?
Okay, that sounds great.
Awesome. Great, thank
Fantastic.
you.
All right. Thanks, Sherry. Thanks, John. Take care, everybody. Great being with you.
Thank you. Have a great week.
All right, bye-bye.